happening, investors? Oh, yes, you know what time it is. It's time for an account update. After I review all the account positions, I'm going to show you some relative performance and then go into the investment tab, give you a full breakdown of the account, including how much debt I'm in and what was my performance today, and give you some market commentary thinking about what's going to happen in the account and what are my next moves from here on out. So going into the account, I'm sitting at almost 154, 633, $34. Up 5% today and up another 1.28 after hours, which probably won't stick, to be frank. Just real briefly, before I even go into the account, I'm expecting tomorrow, just the way by the markets are moving, I'm expecting tomorrow to be another update that's going to get faded towards the end of the day, and we're going to have a red Friday and a red Monday. So tomorrow I'm going to do my best to kind of layer on some quick tiny shorts to profit from the downside. I was really disappointed to see that the Chinese ADRs did not bounce back strongly today. So hopefully they do that on a red day in the US. So anyway, back to the account. This is the performance up 5% today, or $7,252. It was quite scary in the morning. If you want to see what it was like here, it was down 6,500 at 6:40 a.m. right in the market opened, and then so that makes it like a $14,000 difference between the low and the high of the day. It's a quite massive turnaround there intraday. Anyways, these are the positions. Starting with the options over here, I'm going to scroll down really quickly. You can pause the video player at any moment to try to figure out the exact position. All the data you may need is inside those little boxes here that have been highlighted. You'll see a lot of Chinese ADRs that are about to expire. I mean, ADR leaps and option calls that are about to expire, worthless probably pretty soon, which is going to be bad for me because I bought a bunch. So these are the equity positions. Apple sitting at a plus 3.25% today. Realty income was about flat. Main Street Capital up 2.5% almost. Paramount 3.34, and Smith & Wesson with a huge gain of 5.29, but I think that includes the after hours. Let's take a look. Yeah, that includes the after hours, so not that big of a gain. After hours is always kind of like fake, not fake, but just off regular hour transactions. They can switch the price one way or the other pretty far. So this is the 1 day performance of 5%. 1 week performance is actually in the positive 1.55. 1 month is of course negative 15%. 3 months 12.8% down. 1 year to date is 17% down, and 1 year chart is 14% down. This is the old time chart. Started investing here August 28th 2018, so ever since then I'm about 111%. Let's compare that performance to the S&P 500, which is the basically benchmark for investors. It's the benchmark. 2.63% on the day. 1 week is down, so I'm beating on the week, so that's very unlike me as of late. The S&P is actually negative. 1 month though, the S&P is beating my ass. It's only down 7.4%, and same thing with the 3 month. It's only down 2.47 when I'm down like, I don't know, 11, 12. On the 1 year chart, about even, I guess. 5 year chart, up 43.64. Let me see, 1 year chart, 15.84 versus 14. So I'm winning by about 1% on the 1 year chart. So the last month has been pretty brutal for me. Dropped all the way from 214,000 to what I am today. The low was at like 130 something in the morning. Let me see. 138,882. So pretty low. The reason why the performance swayed so much is because if we go in the investment tab, you'll see that I have borrowed almost $110,000 from Robinhood that I have to pay back. So I'm levered up like 80%. Even though it says 41.49, you gotta times that by 2. This is maximum leverage right here in the middle. Total assets under management 282.44. Equities sorted by size. I got 101,000 in Apple, 86,000 in Smith & Wesson. Main Street Capital 31,000, Realty Income 23, Paramount at 22,000, 23,000. Sorted by total return, Apple's the only one in the green with 16 grand and a half of long-term gains at this point. Realty Income red, Mainstream red, Paramount Global red, minus 11,500, and Smith and Wesson down almost 18,000. Now, how is it that if these positions are all red and I've lost way more than I've gained, how is it I'm still up on the account? It's called trading. You sell when you're up, you buy when it's down. It's called trading. So skim off the top, sell call options, buy leaps, sell leaps. So there you go. Okay, now that is the account. That's the full review. Now on to some market commentary. Now I kind of misspoke, I think, not too long ago, and I'm of the worthless opinion that I'm not a market timer, so that's why the opinion is kind of worthless, but it's fun to pontificate about it. What I'm thinking here is we're going to mark the bottom actually in November, because I made a bit of an error in my thinking, but the October inflation numbers are reported in November, and I think that they're going to come in hotter than expected, just like September came in hotter than expected, but October will be even hotter, which was going to leave no choice for market participants but to sell out all their positions, and we're going to have a big spike down, and that's going to mark the bottom. There's going to be massive pessimism, max pessimism, because obviously inflation being hot means a lot of bad stuff is about to happen, including higher rates, going into raising rates and going into a deeper recession. It's going to be a complete mess. Like normally, if inflation wasn't there at this point, the Federal Reserve would already have the rates at zero. They would. Like, if you see that much slowdown in the economy, you see prices, getting, the the labor force getting hit. If you're seeing these GDP numbers and stuff like that, real GDP numbers, the Fed would be easing at this point. It wouldn't be tightening, but because of inflation, it has no choice apparently but to keep the rates going higher, and we'll see where that takes us. I don't know where the top of the rates will be on this cycle, so I guess nobody knows, even the people that are setting them. Apparently, it's data dependent. So anyways, I'm thinking a November bottom when the CPI data is announced, the inflation data is announced for October. So bottom in November because of the data in October. That is my guess. Now, with that being said, I am sitting on... So ideas. I wish I had some more money to play with. I'm being super greedy. I got rid of my STC share for a $1 profit. But what I did in exchange is I actually bought some. I also sold a JD put short term, and I have 2 JD calls expiring on the 21st. There's a bunch of stuff expiring on the 21st, by the way, so I'm going to have a lot of play money. I have to be careful though, because I'm already levered up so much. If I continue to dip down and in the Robinhood pool of money, I might go over 100% leverage, in which Freudian slip, at which point I'm going to have to get more margin called. So I don't want to go any further in that if I can help it. But I'm really hoping that we're going to have a little bit of a short-term rally by the 21st, so I can clear a lot of these put positions that I've sold against Realty Income and Mainstream Capital. I'm going to re-roll them at a lower price. Because the market is just moving way too quick for me right now, and I'm having trouble rolling my contracts further out. So I'm really hoping for some stabilization here in the market before it continues further down. It would suck if it was heading straight down again from here at the same speed. Would not be good. So I need a little bit of a breather. I'm sure a lot of investors do. But I wasn't able to reduce leverage enough here around August Unfortunately, I was trying to. I was at all the way down to like 10% leverage up here on August 15th at the top. And then I started layering it on as the account was going down because it's what I do. It's my system here. However, the market continued to go down very sharply, and now I'm in a bit of a trouble. That's why the account has dropped so much. It's dropped like 50 grand or something in the last month and a half. Huge drops. So I may go short term bearish, but if the market has a bit of a bounce and hopefully it clears some of these contracts by the 21st of October. So that's what I'm hoping up for. That's what I'm looking for. Just play it small and hold on to my positions, and hopefully I stack some gains in the long term, and I survive the bottoming process of this bear market. That's going to be the real challenge, is surviving the bottoming process. All right. I've already gone through some ideas, lots of reviews, and I've talked about my potential moves. So hopefully you all are surviving this better than I am. I'm sure some of you might actually be making money. It's pretty modern and in vogue right now to be bearish. So hopefully you guys have been and have made some cash. All right, that's it for now. Peace out.